So what does fair value hold for the insurance industry over the next 3 to 5 years?
Change. I think that's the one word that sort of sits at the heart of it. A lot of change. I think the core piece that I would just want people to understand, and you know, James, you can speak to it from your experiences, this isn't going away. So get used to it, learn how to think about it, learn how to respond to it, because certainly what we've seen from other parts of the financial services sector and indeed in other countries is that this is a concept that's here to stay, and it will drive a lot of change over the next 3 to 5 years. And I think I just want to re-emphasize a point that was made before, but that change can be positive. So being good for customers, plus being good for the company, plus being good for compliance, those can be positive. But it's a question that insurers then have to try and make it positive. It's going to be an effort to do that. It's not going to happen by accident.
Yeah, I agree with that, Ian. And I think there are, for me, you know, again, based on prior history in financial services, there are two paths that the insurance sector may go down, or some in the insurance sector will go down. There's the positive path where you'll see improved net promoter scores, you'll see happier customers, better value to the customer, more satisfied staff retention, loyalty, hiring talent, all the positives associated with trying to develop a fairer value ecosystem that consumers buy into. Then you'll see a negative path that's more about trying to resist that change, trying to fight that change, trying to avoid that change, and fundamentally not accepting pricing, operating models, culture will all need to change to deliver what the regulator wants to see. And there is one constant, I would say, over the next few years that's absolutely going to be there, and that's if the outcomes the regulator is seeking do not materialise, then the rules will change again so that those outcomes are materialising and are delivered on behalf of consumers. Without a doubt, the outcomes through that CP 1920 will be delivered over the next 3 to 5 years.
There's also a lot of other things that are going on at the moment, which I think will particularly make the next couple of years really tricky for insurers. You know, many are heavily engaged in large digital transformation programs. We've got whiplash reform going on this year. We've got COVID and lockdown, which is resulting in behavioural changes for customers as well. And so I think it's a really tricky period for insurers to navigate, you know, successfully. And I guess that the FCA measures, as some might put, are kind of the icing in the cake. But I think that from a regulatory standpoint, I think we will see them evolve. You know, to James's point, I think we'll see them evolve policy over the next 2 years, depending upon how the industry responds to the changes. Yep. And as a result, I think the challenge and the winners and the losers, the winners will be the ones that successfully navigate all these issues and actually manage to come out ahead of the game. You know, whereas, you know, again, building it, you know, to James's point, the danger is if you resist it or you find change difficult, it's going to be hard. It's going to be a hard period, I think, for those that are in that particular space, because it's going to be a really challenging period, I think.
I think just to your point, Colin, and again, sort of slightly devil's advocate here, the changes are the cake, not the icing on the cake. And that's the fundamental piece that I think that in the banking sector, it took some time to realise that these changes were not icing, they were not window dressing. It was fundamental to that's what's got to change. You took something like the Retail Distribution Review, which involves selling wealth products and providing, you know, investment advice to people. Within the first year of that coming in, 30% of financial service advisors dropped out of the market because they simply couldn't operate within the new fair value regime. It was no longer profitable. All their practices made it difficult for them to continue to operate. That's a fundamental change. And I think that you'll see those same levels of change occur across the insurance sector over the next 2 to 3 years.
So I think the really interesting issue here is that the change over the next 3 to 5 years is a strategic change. It's about the entire culture and governance of the organization, not just about a few tactical changes here and there on a price here or a tweak on a product mix there and all those kind of things. It's going to be about, is the governance of the organization focused on delivering long-term fair value for consumers? And can it do that in a way that delivers long-term profit for stakeholders as well, for shareholders? And that's the big change. It will bring the customer truly into the heart of the business, bringing value to customers truly into the heart of the business. And it's kind of almost horrific to think that that's a change, but that's what's going to happen.